Germany has passed a bill not for 500 billion, but for 1.1 trillion of infrastructure and military. That was twice the expected amount, or they pulled through and put the passage. If that goes through and the funding happens from debt, it will raise Germany's debt to GDP from 60% of GDP to close to 90% of GDP. And that is a sea change. The Bundesbank was the only adult in the room in Europe, frugal, fiscally sensitive. That's out the window. By pushing the funding of NATO back onto the European partners, even if US is going to remain in NATO, has had a impact on markets that we haven't seen really in decades. You're looking at the DAX here up 20%. You're looking at the 10-year Bund, the yield up 20%. We don't usually show yield, you show performance, but you're looking at the yield expand because of fiscally led inflation. And meanwhile, what did the dollar do? Dollar down. NASDAQ down, US yields flattish on the year. So you're getting what Scott Bessent wants is an acclimation period. There's going to be pain in the equity markets. He wants a weaker dollar. He wants lower yields. He's going to pump more oil, drill, baby, drill. His 3 billion barrels, 3% growth, and a 3% deficit is, you can't say he may not achieve it, Bill, by the midterms if he's going to put this military